PayPal is up 32% and change, and there's Accenture 32%. What's coming for August? Let's get right to our floor show to AccuVest CIO and portfolio manager Eric Clark. I want to pivot back to the earnings numbers in just a moment with you, but I got to ask you about what we're seeing with regards to the economy and the bond market in particular. You know, I've heard many analysts come on the network now and say, look, if the Fed isn't going to raise interest rates and deal with inflation, the bond market's going to do it for them.
Hey, happy Friday to you. Happy summertime. Yeah, I mean, we have a bond, you know, the bond vigilantes are certainly out. And if you're going to be fiscally irresponsible, then the people that want to buy our bonds are going to require higher rates for that, for that risk. And we do have this oil problem, this Middle East problem that's pushing energy prices up. That pushes inflation up. And so interest rates are kind of doing what they should be doing in the short term. And, the market has largely kind of looked through that. Bonds obviously are a little bit more challenged, but from an equity perspective, some of the bond proxies still look pretty good, even if interest rates are moving up. And that's, usually they're pretty correlated sometimes, but they've been safe havens, particularly this month.
What are the offshoots, as we went through this GDP read that we got yesterday morning? One of the things that Mark Malik over at Siebert writes, he says this. He said the GDP report had its own price data, but you needed to look under the hood. One of the things he points to is the gross domestic purchases price index. It spiked to 5.7% for the quarter. In layman's terms, this is the index that tells you what Americans are paying for stuff. Is the market looking past that at its peril right now?
Well, I think it's going to be a little more important. You just never know when things become important, even though they are. I mean, clearly consumers are feeling more inflation, input costs for businesses, more inflation. You heard it from Apple. And eventually that becomes an issue if it stays for longer. And so this inflation is not to be reckoned with, and it doesn't appear to be going away anytime soon.
Let's get to your stocks, because you still say that Amazon is too cheap still right now. Why is that?
Well, I think people have just been they've always underestimated the retail side, but it's a massive part of the business. And margins keep growing up. Their cost to serve keeps coming down. And so that's underestimated. And obviously, this was a bit of a breakout. And we saw it from Google Cloud. We saw it from Microsoft Azure. And now we're seeing it from AWS. The market was very worried and put these stocks in the penalty box because of all this CapEx spend and no sight into a good ROI on that spend. We're now seeing, as soon as capacity becomes available, these guys put that money to work and they start getting paid. And so revenue has been up, margins have expanded, and so when I look at Amazon in particular, it's been a wonderful performer long term, but the last 5 years has been a very anemic annualized return. And that tends to be because of big CapEx spends. But I think people are realizing these guys are pretty good capital allocators. And obviously today is a big catch-up opportunity, because I think money is now rotating back into some of those names. If they can feel good about the ROI that's going to come from that CapEx spend, then that's okay.
Well, because the rotation has been into healthcare and financials and out of, again, those AI and those tech names, to your point. I think it's also interesting that you say we shouldn't worry too much about the Apple quarter, even though the stock is down about 9% right now. Eric Clark, it's great to have you on the program. Thank you for being with me.
Thanks a lot.